Hello everyone, welcome back to Financial News. Today is April 17, 2023, and I'm Ron Jankowski with Channel 4. My co-host is Paul Munico from Ameriprise. Paul, I'm going to let you give us an update as to what's happening in the financial world this last week.
Thank you. I'm going to give a little bit of a market recap for you. So the first quarter, we saw solid gains despite the macro headwinds. U.S. equity markets closed the first quarter with good momentum, despite considerable volatility along the way. The three major U.S. averages were higher in the month of March. Now, March's gains did not come easy. Investors entered the month worried that the Federal Reserve officials could raise the bank's overnight lending rate by 50 basis points at their March 22nd meeting. Ultimately, they hiked by 25 basis points, which would have represented an acceleration from the 25 basis point hikes implemented at the Fed's prior two meetings, due to some signs that inflation might be becoming quote-unquote sticky. Inflation and the Fed's potential response soon took a back seat, however, after the nation's 16th largest bank, and that's by assets, and of course we're talking about Silicon Valley Bank, SVB, collapsed on March 10th. Now the collapse brought banking system health concerns to the fore and offered unwelcome comparisons to the 2008-2009 financial crisis. Even though the fear of another banking crisis subsided as March came to a close, we should not necessarily take it as an all-clear signal just yet. Federal Reserve data, now through March 22nd, showed banking system deposit outflows continuing. Commercial real estate loans have also been under closer scrutiny as most such loans have short maturities and will need to be refinanced at much higher rates in the months, quarters, and years ahead. Now, we believe investors will focus on macroeconomic factors over the next few quarters, paying close attention to inflation, interest rates, employment, geological tensions, banking developments, and importantly, less discussed, greater difficulty for businesses to refinance their debts due to tighter loan availability and much higher rates. Our advice, avoid timing mistakes and focus on what you can control. We believe long-term opportunities will eventually present themselves to patient investors. But always, when you're investing, talk to your financial advisor before taking any action.
And I'm going to pick up with this morning's news from Ameriprise. They forward this information. U.S. stock index futures are flat this morning after pulling back on Friday, but ending the week higher by 0.8%.
It was nice to have the higher week last week, and I know you're going to give some updates on the market returns, which seem to be improving a little bit.
I will do that. Markets in Asia closed higher, led by Hong Kong, a plus 1.7%, while Europe is trading mixed at midday, but well off the session's higher.
Good sign. I mean, we're a global economy, right? If the other markets are up, chances are we might be up too.
Yeah, exactly. We usually follow suit to some degree. Treasury yields continue to march higher after a bear flattening move last week with a two-year back at 4.16%.
Those interest rates have been on the move all year. Yeah, it's where they're going to wind up.
Yeah, who knows?
Who knows?
Bitcoin is pulling back 3.5% pre-market. Gold is up 0.4%, and that's after the 0.5% gain last week. And the WTI crude is down 0.3% after gaining over 2% last week. As you mentioned, the year-to-date index percentage returns S&P 500 is a plus 8%, and the Dow Jones is a plus 2%. NASDAQ is a plus 16%. So we're saying getting better into the solid side.
The three main indices that we cover are all positive.
Yep.
It's getting warmer out. Spring's here. Summer will be here. Let's try and be happy and keep this market going.
I'm with you. I'm with you, Paul. Okay, stay with us. We'll be right back with a show called Your Money. Paul has an interesting topic to share with us. Stay with us. Thank you for staying with us with our show called Your Money. And Paul's going to be talking to us an interesting topic, as it usually is every week, consideration, I should say, before career breaks are taking place, and then you plans for a change in your career, or before you make a change in your career, or maybe you just want to plain retire. There are a lot of considerations that take, and I'll let you take it from there, Paul.
Absolutely. That's the exact topic I'm going to cover today, so let's dive right in. There are many reasons adults choose to step off that career treadmill. You know, for some, it's to care for children or other loved ones, such as elderly parents. Others decide to take a step back in order to pursue higher education or training that will position them for new or expanded opportunities in the future. And some just simply come to the conclusion that they need a break in order to pursue other interests or recover from career burnout. Whatever the case may be, if you plan to downshift your career, even temporarily, it's wise, of course, to plan ahead. So today we're going to go over some tips to keep in mind before you turn in that resignation letter. Beginning with number one, you need to define your time away. So consider what your leave will ideally look like. Determine how long you plan to be on break with start and end dates, keeping in mind that you may need to stay flexible in case it takes time to land a job once you're ready to get back in the game. Next, define what you hope to accomplish and what resources you may need. So your answers to these questions will help you estimate the monetary impact of your change in employment. Always good advice, create a budget. So review your sources of income and projected expenses to ensure you will be able to make ends meet without your usual paycheck. Make sure you have sufficient savings or other income, such as investments or a partner that you can rely upon to meet your monthly obligations. If you plan to be out of work for 6 months, maybe budget for 9 months to prepare for unforeseen changes to your timeline. Additionally, avoid funding a planned career break with emergency funds, which should be reserved for unexpected events such as a medical emergency. It's important to stay covered. You may be entitled to continued health insurance coverage if you take an approved leave from your employer. On the other hand, if you plan to voluntarily quit your job, your employer-sponsored coverage will end. So understand your cost-sharing and enrollment window for gap coverage. COBRA insurance offered through the federal government will be higher since your employer is no longer obligated to subsidize them. Always consider other options such as coverage through a spouse or a more affordable short and long-term medical coverage through the health insurance marketplace. Next point, always important, keep saving. Ideally, you will continue to maintain progress toward long-term goals such as college or retirement during your time away from work. The consistency of saving will be beneficial in the long run, even if you must lower your monthly contributions due to reduced income. You'll want to weigh your career repercussions. Consider how a leave will affect your career trajectory. As a work hiatus may reduce future earnings, impacting Social Security, retirement benefits, and long-term financial goals. It's quite possible your exact job will not be waiting for you when you return. If you qualify for leave under employment law, your employer can place you in a quote-unquote similar job after your leave expires. An employer has leeway under the law to fill your chair with someone else if they can show that keeping the job open would cause the company financial harm. Next step to consider is create a re-entry plan. So presuming you intend to return to your current workplace, your employer will want to know your anticipated date of return. If you plan to seek new employment, stay in touch with your professional network, keep an eye on the job market, and be proactive in applying for openings. If, in the back of your mind, you're not certain you'll return, give some thought to what you would do next and how you will manage financially. Always good advice to seek guidance. A financial professional can help you study the impact of stepping away from your career. Armed with insight from a financial advisor, you can feel confident about this next chapter of your life.
And excuse me, Paul, in summary, what you're really saying is if you're going to do a career break, it'd be short-term or long-term, and you just want to plain retire, you better plan ahead, you better talk to your financial advisor, and you better create a budget because you may be surprised and it'll be hurting you financially, especially if you do go back to work. It might be at a lesser income.
You don't know. I mean, there's no, unless your employer is going to give you that same job back, these are all things that need to be thought about and planned out ahead of time.
Okay, anything else, Paul? What if a viewer wants to talk to you personally about this plan of maybe reviewing their portfolio to do this career break?
Absolutely. If they want to give me a call on this topic or anything else, feel free to reach out to me directly at 708-226-3412.
Thank you, Paul. For Paul Munico with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palo Sites, we wish you good investment day.